Good afternoon and welcome to BDO's next COVID-19 webinar about the stimulus measure, the JobKeeper payment. My name's Mark Molesworth. I'm one of the tax partners with BDO, and I'm joined today by James Trainor, another of our tax partners, to take you through the details that we have about the JobKeeper payment. Thank you very much for joining us on this webinar. To let you know, this webinar is being recorded and the link to the recording will be distributed to all registered attendees at the conclusion of the webinar. So if you miss anything or you want to go back, please feel free to listen to the recording and you get to hear James and I speaking about JobKeeper yet again. The other thing is, many of you have sent in questions. We have had more than 3,000 people register for this webinar. Your questions that you sent to us ahead of time have guided our presentation and guided the contents of this webinar. However, because of the huge number of questions, our ability to get back and answer everybody's specific question is going to be, to put it mildly, quite limited. So if you do have questions, we have contact details at the end of this presentation for people that you can call or email to talk to about anything that is relevant to your specific circumstances. What we're going to cover today is the purpose of the JobKeeper program and an overview of how it works. And then James is going to take over and talk about who is eligible, both from the employer and the employee perspective. Going to talk about eligible sole traders and other business structures, because that is one of the advantages of this stimulus measure over the previously released ones, in that it applies to sole traders and other business structures as well. And then I'll come back to wrap up to talk about the claim and the payroll process that needs to be gone through in order to make a claim for JobKeeper and the next steps that we recommend you should take. So moving right along, what is the purpose of the JobKeeper program? It really is a massive social welfare program. It's projected to cost somewhere around $130 billion over the course of the next 6 months. Now, to put that in context, all governments within Australia, depending on how good the year is, will collect somewhere between $400 and $500 billion in tax in total. Therefore, this program on its own, leaving aside all the other stimulus measures, is about a quarter or slightly more than a quarter of the total tax take in Australia in a year. The program is designed to be delivered via the tax system, and the tax office has general administration of the program. And it's important to look at this program through two lenses. It's partly a business subsidy because in part it subsidizes the payment of wages to employees, but it's also in part an income support payment, using employers a little bit like Centrelink, because the way this works is it's a system that incentivizes employers to keep employees on the books, even if they're not actually working any hours, even if they've been stood down, and to continue to get money into those employees' pockets. So the way that the program works is that you have to show that you've been impacted by COVID-19, and that's measured by an expected decline in turnover. And James will talk about that shortly. If you're eligible, the business will receive $1,500 per eligible employee per fortnight, and that will be paid immediately after the end of each month. So this program commences on the 30th of March, so effectively for the month of April, and the first payment will be made in the early part of May by the tax office. The payment is taxable to the employee, and it will be subject to pay-as-you-go withholding. So all the way through this presentation, we're going to be talking about providing $1,500 per fortnight to the employee. But please bear in mind that that $1,500 is gross. It's gross of tax. And once you apply the pay-as-you-go withholding tables, the fortnightly tables, to a $1,500 payment, that means it's approximately $1,300. I think it's exactly $1,308, but approximately $1,300 after tax into the hands of the employee. One of the requirements is that it must be passed on in full, and passed on is actually a bit misleading because, as James will talk about, the way that the rules are set up, it has to be paid in advance and then reimbursed by the tax office in arrears. And the final thing to note is that the interaction between JobKeeper and superannuation guarantee is going to be a little bit complex, because wages that are paid in relation to the hours that people actually work are going to be subject to superannuation guarantee. But any top-up, which is purely just the pass-through of JobKeeper, which doesn't relate to hours worked, will not be subject to superannuation guarantee. This is something that we will have to bear in mind when we're looking at our payroll system. So if we move along, the way that this legislation has been put together is a little bit interesting. The legislation which passed Parliament last night is actually enabling legislation which lets the Treasurer make rules about stimulus measures which will allow the tax office to pay money to entities, to businesses, to taxpayers. So the legislation itself doesn't have a lot of the criteria about who's eligible for JobKeeper and who's not. It's really mechanical. It talks about how payments will be made and what happens if there's an overpayment, what record keeping is required, and importantly, what are the anti-avoidance rules around payments made under this enabling legislation. But the rules themselves are going to be very important. Now, as of about half an hour ago, those rules had been released in exposure draft form yesterday and then rapidly removed from the Treasury website. So the rules that we are working with are the exposure draft rules, which may have been exposed a little bit early, perhaps, by someone in Treasury, but they're the rules that we're talking about. They are broadly consistent with the fact sheets that Treasury had released on the JobKeeper stimulus measures. And so we think that they're likely to be more or less the final rules, and therefore we're confident in providing this webinar today. However, it would be worth, for your specific circumstances, making sure that you check back against the actual rules once they're made. So if we move on, when looking at whether someone is entitled to receive a JobKeeper payment in respect of a fortnight, then in that fortnight you have to be an eligible employee, employing at least one eligible employee. You've got to be paying wages, what is described as wages, of at least $1,500 to that employee for that fortnight. Now, let's be clear here. The wages which you pay in respect of hours actually worked may be less than $1,500, or they might be more. Where they're more, there's nothing further you have to do. So if you're being paid $2,000 in the fortnight for the hours that have actually been worked, then there's nothing further you do. You collect the JobKeeper payment from the government, and that's it. Where the hours that the employee has worked entitle them to wages of less than $1,500 in the fortnight, it could be zero if they've been fully stood down, or it could be some smaller number if they're not entitled, so if they're entitled only to say $800. Then you have to top up to $1,500 using the JobKeeper payment. So to take the extreme example, an employee who's been stood down, 0 hours of work, 0 entitlement to wages, we have to pass through the full $1,500 before tax. Ultimately, the payment to the employee might be that $1,300, and the balance will be pay-as-you-go withholding, which is sent off to the tax office. But ultimately, the full $1,500 per employee payment has to be made. You've got to notify the tax office that you as a business are electing to participate in the program, and you've got to provide information to the tax office about the entitlement, including the details of the individual employees that you're receiving JobKeeper payment in respect of. So the record keeping and the notification requirements here, the administration, if you will, are going to be quite onerous. I think as we move on to the next slide, this is where James is going to take over and talk to you about eligibility. So over to you, James.
Thanks, Mark. Look, so the first thing that an employer needs to decide is, are they eligible to participate in the JobKeeper scheme? And eligibility is firstly based on a decline in turnover. Now, not everything is really simple around this. So there are different thresholds, so different declines in turnover which apply. the decline in turnover, which applies to your particular business, will actually depend on the nature of your business. So those businesses which have an annual group aggregate turnover of less than $1 billion, they will be eligible if there is decline in turnover for the employer of at least 30%. And let's just kind of go through that in a little bit of, or in a couple of steps. So in terms of deciding whether the $1 billion threshold is met or not, you need to look at group aggregated turnover. So that is looking at entire group, Australia, external, affiliates. So it's looking at the entire business. When you determine whether you are applying the 30% or the 50% decline in turnover, you're actually looking at the turnover of the employer, so down to the individual employing entity. So it's possible that, notwithstanding that the operations are relatively small in Australia, if there is a large global presence for that particular company, that you might find that the turnover decline requirement is set at the 50% rate for the company here in Australia. For charities, those are charities registered with the Australian Charities and Not-for-Profit Commission, excluding schools, the decline in turnover is 15%. And we'll have a talk about in a second the periods that we look at, but broadly those are the thresholds that you're looking at. In relation to self-employed individuals, they too are eligible under the scheme, and they will just fall under the relevant turnover test based on the thresholds mentioned above. One other point just worth noting in relation to this is that if your business has a couple, or if your employing entity operates a couple of different businesses, and those businesses, one of them might be operating quite successfully and one of them really struggling. If you've only got one employing entity that's employing all of the employees, regardless of which side of the business that they're working on, you might find that you do not satisfy the client decline in turnover threshold. There are also a number of employers who are specifically not eligible to participate in the scheme. For the most part, a lot of the federal and state government bodies and agencies, local councils, businesses that are subject to the major bank levy, and also companies that are in liquidation, or if it's an individual where a trustee has been appointed to that particular individuals. There's also some sectors that might be covered by other areas of support from the government, and they might be excluded as well. It's also important to note that the entity actually needs to carry on business in Australia and in order to be eligible. And if that's not the case, then those employers are not eligible for the scheme. So coming back to this idea of turnover and the basic test. So there are two tests for turnover. There's a basic test and there's also an alternative test. Firstly, touching on the basic test, when we're looking at turnover, turnover is defined for GST purposes. So that's Australian-based turnover of the particular entity. The period that we're looking at is a calendar month between March and September 2020, or a quarter starting on the 1st of April or 1st of July 2020. And that then is compared to a corresponding month or quarter in 2019. So for example, if you're looking at your turnover for April 2020, then you would be comparing it to your turnover in April 2019. So it's a corresponding period. If your business has not yet suffered the decline that's required to be eligible to participate in the scheme, that's okay. You can still become eligible later during the scheme period. So the scheme is due to run for 6 months. So if you don't become eligible in March or April, but do become eligible in May, then from May through until the end of September, then you can be eligible for that later period. Although the rules are somewhat ambiguous in this case, it doesn't appear that you need to retest once you have satisfied the decline in turnover. So if you have a particularly poor April, you satisfy the decline in turnover test, and you're eligible for payments, then if your business turns around in June or July, there doesn't appear to be an obligation on you to cease getting payments under the scheme through some sort of retesting. As I mentioned before, the $1 billion threshold is based on aggregated turnover, so that's the worldwide group. And importantly, it's in either the current year, so either in 2020 or 2019. So in either of those years, if you're above the $1 billion threshold, then the higher 50% decline in turnover rate applies. Now, in terms of actually assessing this, at first instance, the ATO will look to your business activity statement for the turnover information for both the prior period, the comparison period, as well as the turnover test period, so the current period. Now, there is also the provisions for an alternative test. So if an entity doesn't satisfy the basic test, then the Commissioner does have discretions to determine that an alternative test is more appropriate, and then that a particular entity might pass that alternative test. So the sorts of things that have been flagged in the fact sheet that the Treasury has put out covers things like newly started businesses, where there have been acquisitions that have been made during the year, employers who are scaling up their operations, or you might have highly variable turnover year on year or even month on month. So there will be an opportunity to approach the ATO. So the Commissioner might put out some guidance that covers a whole class of employers, or it might be the case that individual companies approach the ATO and they get a determination from the Commissioner in relation to their particular circumstances. The fact sheets have also flagged that there will be some tolerance for good faith estimates, and that's certainly covered as well in the rules, where the Commissioner does have some discretions to choose to not repay amounts if an employer determined in good faith that they would meet the decline, but then fell short by a small margin. So there is that discretion on the Commissioner. So employers will need a few things to support their eligibility. They'll need to look at their BAS. If you don't satisfy the basic test, then you'll need to provide some additional information to the ATO to support that atypical turnover. You'll also need to receive, and we'll go into that a little bit further later on, but you'll also need to receive from employees a nomination notice that the employee wants you as their employer to include them for purposes of the JobKeeper payment. And as mentioned, there's also some ongoing reporting to the ATO each month to provide the ATO with details around your actual and projected GST turnover, as well as details of the employees who are participating in the scheme. Important to note that the law does require businesses to have obtained and retained the relevant records in order to be entitled to the payment. And those records should be retained for 5 years. And certainly the experience we've had in other schemes, not quite to the same extent as this, but other sorts of schemes where governments have paid amounts to employees or to companies in respect of employees, that there is a strong requirement on those businesses to retain those records in case there is audit down the track. And we've certainly seen regulators take very hard lines where employers have not been able to satisfy the reporting requirements. A couple other points to know in relation to employer eligibility. If you are not entitled to the payment for some particular reason, then there is a requirement to repay it. And there is also the ability for GIC, General Interest Charge, to apply to amounts that have been paid incorrectly. There is also a discretion on the Commissioner to not require repayment in certain circumstances. As Mark mentioned, there are anti-avoidance rules. So if there is a scheme that's put in place to access the payment or to access a larger payment than would otherwise have been applied, then it is open to the Commissioner to determine or to pursue a claim for anti-avoidance and seek to impose a refund and penalties indeed for participation in such a scheme. If the Commissioner, for example, in that alternative test, if you apply to the Commissioner denies that there's been the requisite decline in value under the alternative test, there is an ability to seek a review of Commissioner's decisions in relation to eligibility. That, of course, will be challenging because of the short time frame that we're dealing with this particular scheme. Employers will also be required to notify eligible employees in writing within 7 days of notifying the ATO that those employees are eligible employees and will be receiving payments of JobKeeper from the particular employer. So there are certainly ongoing obligations on the employer as well. And finally, there's interaction with other sorts of subsidy or stimulus schemes that are have been announced. And in relation to apprentices and trainees, if you are receiving a wage subsidy in respect of those apprentices and trainees as part of those other stimulus packages, then from the 1st of April 2020 onwards, you won't be able to receive the apprentice and trainee subsidy if you're receiving the JobKeeper payment. So there's no double up in respect of that. So that's the employer eligibility. Once an employer has determined that they are eligible to participate in the scheme, then they need to work out how many of their employees are eligible to participate, which in turn determines the amount of the JobKeeper payment that they will receive. So in respect of employees, there are 2 sets of requirements that need to be satisfied. There's the 1 March 2020 requirements, and there's also separate fortnightly requirements. It's important to note that one of the requirements for eligibility is that the individual is actually given the employer a nomination notice confirming that they satisfy certain requirements. The nomination notice will be an ATO form, which they have not released yet, but should be released shortly. But it's important to note that there is certainly a lot of communication back and forth with your employees to let them know that they are eligible, and also for them to confirm to you as the employer that they want to be paid JobKeeper payment by you as their employer. So touching first on the 1st of March 2020 requirements, in order to be eligible, the employee needs to satisfy all of these things. And it's as at the 1st of March 2020. So the individual needs to be 16 years or over. The individual needs to be employed as either a full-time or a part-time employee of that particular entity, or if they were a casual employee, that they were employed by that entity on a regular and systematic basis during the 12-month period to March 1st, 2020. And also, the individual needs to be an Australian citizen or permanent resident, or a New Zealand citizen who's also a resident of Australia for tax purposes. It is possible that if you have an employee who's been terminated or stood down after the 1st of March, that you can reinstate them, and those individuals can then be eligible for a JobKeeper payment going forward. As I mentioned up front, but just to be clear, these requirements apply at the 1st of March 2020. So if an employee turned, was aged 15 at the 1st of March, but turned 16, on the 1st of April, unfortunately, they will not be eligible because they don't satisfy the requirement as at the 1st of March. In addition to the 1st of March requirements, there's also a series of fortnightly requirements that the individual needs to satisfy. So for each fortnight that the employee is potentially eligible, they need to satisfy a number of requirements. Obviously, firstly, that they've satisfied the 1st of March requirements. Secondly, that they were employed at any time during that particular fortnight. Thirdly, that employee can't be an excluded employee. And an excluded employee is someone who during that fortnight might have been receiving paid parental leave, been receiving dad and partner pay, or who was in receipt of workers' compensation payments because they were totally incapacitated. So in those circumstances, they'll be an excluded employee and not be eligible. Fourthly, the particular individual needs to confirm that they have not given another entity a nomination notice to receive a payment. So this is the case where the particular individual might have 2 or more employers, and so they need to choose one employer to receive the JobKeeper payment from. So they should nominate only to one employer in order to receive the JobKeeper payment. And finally, as I mentioned before, the employee actually needs to provide the employer with a nomination notice saying that they've satisfied the eligibility. Again, the ATO is expected to provide a form here that will confirm that all of these things have been satisfied. The employee will provide that to the employer, and that will then be retained by the employer as part of the documentations to support the fact that the particular employee was eligible to receive the payment. We mentioned up front that one of the benefits of this particular scheme is that it extends beyond employers. And I know we've been talking about employees and employers in the preceding slides, but in a similar way that it applies to employees and employers, sole traders and other businesses are also eligible to participate in the scheme. Now, the way that this is done is that even where the particular business doesn't pay wages, provided they satisfy the employer eligibility requirements, they can be eligible to receive payments under the JobKeeper scheme. However, for these sorts of sole trader type of businesses, there are two additional, or there's an additional integrity or requirement that needs to be satisfied. So the first thing is that the entity needs to have had an ABN on the 12th of March 2020, and they need to then have satisfied one of these two additional integrity rules. The first one being that they had assessable income in 2018 and 19 from carrying on a business, and they notified the ATO on or before the 12th of March 2020 of that assessable income. Or that particular business made a taxable supply between the 1st of July 2018 and the 12th of March 2020. And again, they had notified the ATO on or before the 12th of March 2020 that had been done. Now, the ATO does have some discretion to allow some further time, but what you can see here is that it's actually a benefit, perhaps, for the ATO to step into the cash economy and require companies to step forward to ensure that they are complying with their income tax obligations and indeed their BAS or activity statement obligations in order to benefit under this particular scheme. Now, because the particular business by its nature won't have any employees, what needs to happen is the business needs to nominate an individual to receive the JobKeeper payment. So for sole traders, that's pretty easy. It's the individual. In relation to partnerships, one partner of the partnership can be identified as being the nominated employee, nominated individual to receive the payment. For a trust, it needs to be one adult beneficiary. And for a company, it's one nominated shareholder or director of that company that can be the one that receives the payment. It's important to note that the individual who's nominated, they themselves must also satisfy the employee eligibility requirements, apart, of course, from being an employee. But that means that they must be an Australian citizen, Australian resident, or a New Zealand citizen, who's an Australian tax resident. So those sorts of things need to be done by the particular individual as well. So, Mike, that covers the eligibility. How do people go about doing it?
Thank you, James. Thank you very much, James. So the claim and the payroll process is where the rubber is really going to hit the road with these provisions, in my view. It's intended that the claims process be made available online. So we will hopefully be dealing with the tax office electronically about this. And let me tell you, I imagine the tax office is hoping that everyone's going to deal with them electronically about this program as well, because otherwise the administration of paper forms is just going to be unmanageable. The payments to employees, so the $1,500 gross a fortnight, has to be made to the employees via the payroll, and therefore that will generate a single touch payroll report. For those businesses that are not yet on single touch payroll, there'll have to be a manual process, but generally your payroll, for people who do have single touch payroll enabled software, that software will produce the single touch payroll report that will be provided to the tax office in the ordinary course of events, and that should then allow the tax office to understand which of your employees have been paid at least $1,500 a fortnight, which will be the first step in ensuring that they are eligible to receive or you are eligible to receive JobKeeper payments on their behalf. Now, where you do make the payment to the employee, it's subject to pay-as-you-go withholding. As I discussed earlier, the superannuation guarantee situation is that for the part of the payment that's made to the employee, which is wages for work actually done, superannuation guarantee will apply, but the top up will not. So if we're topping these employees up to $1,500 a fortnight, then there is no obligation to pay superannuation guarantee on the top up amount. Payroll tax is interesting. The only jurisdiction we're aware of who has said anything about payroll tax on JobKeeper payments is South Australia. And South Australia has said that the top-up amount, so the amount which is not related to hours actually worked, will not be subject to payroll tax in South Australia. Now, it will be interesting to see whether that position is maintained in South Australia and whether it's maintained in any of the other states and territories as well. In terms of getting the payment through, it'll be received by the employers. The fact sheets say in the first week of May, in respect of the first 2 fortnights in April. The legislation and the rules allow for the payment to be made within the first 14 days of the following month, so that might be pushing over into the second week of May potentially. But in the first half of May, eligible employers who have eligible employees should be receiving these payments. So therefore, what do we need to do? And we roll over onto the next slide. First of all, we have to register with the tax office. So please, any business who thinks they might even possibly be eligible for JobKeeper payments should go to the tax office website and pre-register your interest. There is a button on the JobKeeper sub-page of the main ATO website, which allows you to register. It's not a claim. It's not saying that you're definitely eligible. It's merely getting your details into the tax office's system so that they know to contact you and let you work out whether you're eligible. The next step then is to work out whether you are, as an employer, eligible. So we have clients at the moment, businesses at the moment should be going back and looking at their turnover in the corresponding periods in the last year, whether that's the month of April, the quarter to June. Look at the corresponding period and then compare to what you expect to happen in that same period in this year. For some businesses, this will be particularly easy. I mean, I can think of food businesses, restaurants, where it's going to be fairly clear that compared to the same period last year, there will be a significant drop-off in turnover. But for those of you who are on the edges or not quite sure, this is the time to get an understanding of what this test is going to look like. The easiest way to check what your turnover is likely to have been is to check your business activity statement for the employing entity. What did it show as the turnover in the corresponding period last year? Because that's the first thing that the tax office is going to look at. If you're close to the number, or if you don't meet the decline in turnover requirement because the corresponding period last year was affected by atypical circumstances. So, for example, you've made a big business acquisition halfway between last year and 12 months ago and now, or perhaps 12 months ago you were being adversely affected by droughts or floods or something else which atypically suppressed your turnover at that time. Keep an eye out for the ATO's exercise of its discretions. We would expect the tax office to be putting on its website blanket statements about what sort of atypical circumstances they will accept and how to apply for the exercise of that discretion. Once you've worked out that you're eligible, you will need to notify the tax office of your election to participate in the JobKeeper scheme, which will be a form that you will have to lodge. That form's not available yet, but keep an eye out for it. You then need to start working out who are your eligible employees. So start checking the single touch payroll reports for the period that encompasses the 1st of March. Work out which of those employees are actually Australian citizens or New Zealand residents who are Australian tax resident. Those sorts of things. Check off all of those requirements. How old are these people? Are these casuals, or have these casuals been working for the last 12 months before, in the lead up to the 1st of March, on a regular basis? Can we prove that? I would caution you that before you consider rehiring terminated employees, you may want to take employment law advice as well. There have been significant changes to the Fair Work Act as part of this package of legislation, but rehiring someone is still a commitment to them as an employee, and certain of your obligations as an employer will suddenly come back to life. So it will be worth taking employment law advice if you're in that situation where you are considering putting employees who have been terminated back on the books so that they can take advantage of JobKeeper. You're also going to have to communicate with your eligible employees, and you may find that some of them are starting to communicate with you even now. You're going to have to request from them and collate and keep the employee nomination forms. Now, we expect again that this will be a tax office form, but at the very least, start keeping records of all that correspondence where your employees are coming to you and saying, look, I want you to be my nominated employer for the purposes of receiving JobKeeper and paying it on to me. This is going to be really important because very shortly there's going to be an obligation commencing where you have to start paying them at least $1,500 a fortnight in order to be entitled to the JobKeeper payment from the tax office. I think it's going to be important also to set up the payroll system and make sure that your payroll system can be configured to deal with the JobKeeper payments. Most payroll systems are set up to pay a certain number of hours at a certain rate, and particularly where number of hours for a particular employee is variable, and therefore the top-up amount for JobKeeper will vary from fortnight to fortnight, that may be difficult for some payroll systems to deal with. Let's make sure that the configuration is right, and let's also make sure that the configuration is right in relation to the application of superannuation guarantee. And then finally, even though you've back at step 2 already told the tax office that you are electing into the JobKeeper scheme, each month you will have to continue to make applications. So on that application, you have to report your turnover for the previous month. You have to report information that for people using single touch payroll, hopefully will be mostly pre-filled about eligible employees, but you will have to start reporting those things. Where you're a sole trader or a business that doesn't have employees and you're applying under those extension of this relief to business owners, you will also have to go through the similar monthly reporting system. So those are the next steps that we think you should take. Clearly, this has been a presentation which has attempted to get into the detail of these matters. However, we understand that this is complex and we are dealing with rules that are still fluid because the tax office is still to release, for example, its discretion for atypical circumstances. We are yet to see a finalised, signed off by the Treasurer set of rules which will apply, although we think we have a pretty good idea of what those rules are going to say. But we do need you to think about your individual circumstances and to apply those rules to your individual circumstances. Timing is going to be critical around this. There is a heap of administration to be done here that you will need to get on top of. Otherwise, if you don't have the documentation, if you don't have the evidence, in 6 months' time, when the tax office switches from being kind and nice and handing out money to its enforcement powers, where it says, well, prove to us that you were really entitled to this money, matters are going to get very ugly very quickly if you don't have all of that information available. But BDO is here to support you. On the next couple of slides, there are contact details for a number of our partners and associate directors around the country who will be able to help. If you have an existing BDO contact person, please feel free to reach out to them. These webinars are being presented to our staff as well and to all of our partners. And so we are bringing everybody along for the ride with this quickly evolving situation. If you don't have an existing BDO contact or you can't reach them for whatever reason, feel free to reach out to any of the other people on the slides. We're here to help. That brings us to the end of the webinar. If I could ask you for your indulgence for one more minute though. When the webinar shuts down, you will see a survey which has a few targeted questions about this webinar. If you could please fill out that survey, that would really help us. We want to keep delivering to you appropriately detailed and timely information about the government's response to COVID-19. Answering those questions will allow us to do that far more effectively. So please, if you could, take the time. Otherwise, I'd like to thank James for co-presenting with me today. I'd like to thank you all for your time, and I wish you well and good health into the future. Thank you very much.